Hey y'all, I'm starting a series on technical analysis. I've been doing it since last 5 years, and in today's video we will be focusing on how to read candlesticks and how to trade these candlesticks. Technical analysis has really helped me to increase my efficiency. It has really improved my entry and exit timings. I'm hoping that it will be same for you guys as well. So before we deep dive into candlestick chart, let us see what is a chart pattern and what are the different kind of charts that we have. So chart pattern is a price pattern that help you to understand the market movements and trends. If you understand the chart patterns properly, it can help you to predetermine the stock movement like breakouts and reversals. The first one that you see here on the screen is the line chart, which is formed using the closing price of the stock or the security. The next one is the bar chart, and the third one that I want to discuss today in detail is the candlestick chart. The difference between the bar chart and the candlestick chart is more or less visual. They display the similar information, but candlestick chart is more visual. So once you know how to read a candlestick chart, you will be easily able to understand what a bar chart is. Now let us see how to read candlestick. So candlestick is basically a type of price chart that is used in technical analysis that displays the high, low, open and closing price of a security for a specific period of time. The rectangular shape that you see in the middle is called as body, and the thin line above that rectangular shape is called shadow or wick. Body represents the open and close of the stock, and wick represents high and low of the stock. Green is your bullish candle, red is your bearish candle. In the bullish candle, the closing price is above the opening price, and in the bearish candle, which is a red candle, your closing is below the opening price. Body indicates the buying and the selling pressure. So longer the body, it indicates more buying and selling pressure. However, struck candlestick indicates a little price movement and more consolidation. There are many types of candlestick pattern, but today we will be focusing on the indecision candlestick pattern, which is DOJI. DOJI represents the indecisiveness in the market where the open and the close price is almost the same. At times, they act as a trend reversal, but not always. If you see in the right side, it's the spinning top candle, which is a variation of the DOJI candle. It has a small body, but the open price is almost equals to the close price. There are many types of DOJI candle, and it is important to look at them so that you can spot them in the chart and take your trades and positions accordingly. The first one that we see here is long-legged DOJI candle. The buying and the selling pressure are in equilibrium. The closing price is equal to opening price, which is a typical trait of a DOJI candle, right? For all the DOJI candle, you will see that the closing price is equal to the opening price. It's one of my favorite candlestick pattern because when it is spotted at the strong uptrend or the downtrend, it might show reversal. The next one is gravestone DOJI. So if you see here, the stock has opened at a low price. However, at the end of the day, the closing price is equals to the opening price, which was low. During the day, what happens is the bearish selling pressure, it overruns the buying demand. This particular pattern, if it is spotted at the top of the up move, it might show reversal. It's not a very common pattern to find, but if you do find this pattern, you can trade it after the confirmation. The last one is Dragonfly. The stock opens at the high price. During the day, the bear continuously tries to pull the price down, but the candle closes at the open price, which was high. If this pattern is spotted at the end of the down move, it might show reversal. So now we have seen the different variation of DOJI. The first one is long leg DOJI, the second one is gravestone DOJI, and the third one is dragonfly DOJI. The common trade being the open price is equals to close price, and it represents the struggle between the bulls and the bears and shows indecision in the market. Now the next thing that we need to know is how to trade this candlestick. So we will be looking at some real examples and charts to see how to trade these patterns. The first chart that we'll look at is Tesla. If you look at the green candles here, they are the bullish candles, and the red ones are the bearish candles. This is a daily chart. If I am taking an intraday trade, I mostly look at 15 minutes time frame, and if I'm taking a positional trade, then I look at 1 day or an hourly chart. Also, it is very important that you know about the overall sentiment of the market because it helps you to take better trades. So let's look at this chart. I've spotted a DOJI here. I I'm going to wait for the next day for the trade confirmation. When I say trade confirmation, my next day candle should close above this doji. If trade, that you need to have your confirmation before entering the trade. So now in the next day I got a confirmation. My stop loss will be below the low price of my doji. Now just look at the beautiful movement that you got after entering that trade. I like to use doji when there is a clear bottom formation or the top formation, and I always use it along with the support and resistance because it works like a charm. So just look at this particular chart, like the first candle where we spotted the doji, the second one where we confirmed the trade, and the third green candle shows a clear breakout from the last few days consolidation. And look at the beautiful move that we got. It's almost a $200 move with our stop loss being intact. So this is the kind of trades that you would want to take. This was like a beautiful positional trade setup. Let's look at this chart, and again, this is the Tesla 4-hour chart. If you see here, there is a proper downtrend move, and we spotted a dragonfly doji at the end of that downtrend. Like I said, we will not enter the trade on the first day. We will wait for the confirmation, and we would have gotten the confirmation on the second candlestick. We entered the trade with the stop loss below the low of the doji, and look at the move that you got. For my swing trade, I keep moving my SL higher. So if there is any candle body which closes below the previous candle body, I would exit the trade. So if you see here, I would have exited the trade here, which was just my swing trade. But then you also need to consider your RR ratio or risk reward ratio before entering such trades. Well, take one step at a time. Today we learned about how to read candlesticks and how to trade them. If you have any questions, please comment on the video. I'll be more than happy to answer. In my next video, we'll look at the support and resistance and how to use these candlestick patterns along with the support and resistance to take trades. Please like, subscribe and share if you like this video. I'll be back with another video soon. Happy trading. Have a profitable 2021.